Welcome back to my channel, Blanc Conception, where we talk about money, stocks, wealth, taxes, all of that good stuff that you guys need to know if you want to be wealthy in the future. So without further ado, let's jump right into this video. So yesterday I made a little part one to this type of video. It was about taxes and how companies, businesses, self-employed people, they're able to optimize their taxes to get tax breaks and pretty much pay less in taxes, just as our amazing president Donald Trump did over his entire life. So check that one out. This one today is about investing and the tax breaks that you will get from investing. So there is an employee, self-employed, business, and then investor. Out of all the four of those, investor is the best one to save taxes on. It is the best to optimize your taxes. So first off, if you're just a normal employee working like a 9-to-5 job, you're pretty much going to get paid, you're going to get taxed between 25 to 28% of all the money you make. I believe it's something like that. I am not a CPA, so do not take my word. It says for entertainment purposes. But depending on what tax bracket you're in, also depends on your age, you're going to get taxed at different amounts. However, instead of paying 28% for your taxes, if you are an investor and you get dividends, you will only pay 15% for the money you make on dividends. That is outrageous. That is a 13% savings. That's nearly double the amount you'll be saving. There's some rules for that. I think it's under $400,000. And then after you hit that amount, it goes up to maybe 20%. But still, 20% is a lot better than 28% being a normal employee. So you need to get dividends. This is what I'm saying. Investing is the best money supply that you need. Dividend, passive income. It is amazing. So also, when you're investing in stocks, depending if you're day trading or long-term, if you're day trading, it's a different rule. I'm pretty sure you still get taxed at about 20% for the money you make. So if you sell a stock under 1 year since your purchase date, under 1 year, you're going to pay about 20%. However, if you hold it for long-term, say 1 year, anything over 1 year, 366 days, you will only pay 15% tax again on your money. So that is why I highly recommend you hold long-term. I hold personally for 10, 15, 20, 50 years down the line, so I don't really have to worry about that. But if you're day trading, you're going to be paying a little bit more in taxes. So I highly recommend hold for 366 days, and you will pay a smaller amount in taxes on the money you make. Also, just as I explained yesterday's video, you can write off based on the profits versus the losses you make. So say you make $100 in profit selling one stock. If you lose $100, it gets canceled out right away. And so I'm pretty sure that's up to $3,000 or something like that. Again, do not take my word for it. This is just for entertainment purposes. But you can write off your losses based on your gains. And this goes for anything stock related. So if you're doing options, this works as well. So personally, in the beginning, I lost about $500 in options. So any money I make over the next year or two, it's pretty much tax-free because I already lost $500. So it gets canceled out. There's also another rule that the government, because people got a little tricky about this, it is called washing your stocks. So pretty much what it is you sell at a loss and then you buy back the stock at the same exact price. And pretty much people, what they used to do is that would give them a tax break because they would count the losses and everything after that would just be gains. However, the government got a little onto that. They got a little hold of what people were doing. So now it is rule 30 days. So if you sell a stock, you cannot buy it back within 30 days and expect your losses to cancel out your profits. It is not possible. The government caught on to that. You cannot do that. This is the last one I have on my list here. It's something called the FICA Tax. So pretty much what it is, the FICA tax is when you're an employee, your employer pays half of it, you pay the other half. I think it's about 15%, so they pay 7.5, you pay 7.5. However, when you're self-employed, you have to pay the full 15%. However, when you are an investor, a trader, you do not pay this tax at all. This is a guaranteed money saver right here. When you're an investor, you do not pay the FICA tax. You are saving 15% on the money you make without getting taxed on it. Again, another 15%. So already right there with the first one, based on the dividends, and this one right here with the FICA tax, that's 30% you're saving on taxes. That is a huge amount. That is hundreds of thousands of millions of dollars over your investing career that you are saving. So this is why I highly, highly, highly recommend you need to be an investor. You cannot be an employee. You can be a self-employed. You should definitely be a business owner. And you should 100% be an investor because they have the best tax breaks. There is no other way to explain it. You need to be an investor. Be a business owner. They have the most tax breaks. You cannot get all these tax breaks if you're an employee. It is not possible. There are little things you could do, like if you go to college, depending on how good you drive, all those type of things. They can give you little tiny bits of tax breaks. But if you're an investor or business owner, you get ginormous tax breaks. And it is 100% legal. So you need to be doing it. So make sure you guys like this video if this is something that really helped you out. Because it will 100% really help you out in the future. So hit that like button. Make sure you subscribe if you're new to these videos. And make sure you comment below. I need some new ideas from you guys. What else do you want to learn? I'm running out of content. Yeah, so make sure you leave a comment. I really want to hear feedback. Tell me what I could change on this. Tell me what else you want to learn, and I'll make videos for you guys. So there you guys go. Just a quick little summary. Being an investor, you'll save hundreds of dollars on tax breaks. So there you guys go. Thank you so much for watching, and I'll see you again tomorrow.